All right, folks, this is the 14th day before tax day in the US. Don't forget to mail in your taxes or file your extensions. All right, so we don't have as many tickers as last week, so we're going to have 3 videos. I will start with a brief indices blurb, and I want you to look for a video tonight, which is usually about 5 minutes, that gives me my plan for the week. And if you followed those videos, you were not led wrong at any point in time. Last week, we nailed it. So we are looking at the S&P SPX. If we focus on what happened late last week, we are thinking, oh, it's the end of the world. Let me remind you that it's not. Now, let me address the fact that there are some headlines, Iran, Israel, whatever. Not going to address those now. I don't know where the market's going to open on Monday. I don't know how much of this is already priced in, at least the initial shock. So we're not going to discuss headlines here. We're just going to go with the charts and keep our head down. And we're ignoring the business headlines. We'll ignore the geopolitical headlines for now. All right. So we're looking at the SPX. Looks pretty bad. Let's start zooming out. If we go to a daily, not so bad. So I'm just going to remind us that we are still within 3%, not even, 3% of the all-time high. On the NASDAQ, it's less. The worst one is the Dow, the DIA, which I've warned us about. I said we have an 8% drop. We've finished half of it already. So we might have another 4 or 5% if they want to continue. The second leg of that is an extension lower, but let's discuss one at a time. So technically speaking, the bulls are losing a step, but they're not out. They are still in control. If we go to a daily chart, we will find out that the bulls are definitely in control. If you go to a weekly chart, it's even worse. It's very bullish still. However, we are smart, and we look at smaller time frames to do what? Call a top? No, we're looking for signs of a top, and we saw a bunch last week. We will address them throughout the week. So let's go through the tickers that were requested today. We don't have as many as last week, so the 3 videos should be short and sweet, about 30 tickers each. We'll start alphabetically, AAP, Advanced Auto Parts. Actually, let me switch windows and go here. Advanced Auto Parts. Oh, now I understand what was going on here. Fell into a support zone, but the support was pretty old and pretty good level if there weren't so many years in between. I mean, that is 2012, if not 2010 and 2008. Holy moly, it's 2006 where they bounced from. All right, so I don't like that, the fact that you have to go that far back in order to get the support. So from here, technically, you need to break out of 88, 89 to get to 104. I'm not sure that they can fill that gap very quickly. I mean, this drop must have been on something serious. I would urge you to look into their financials and fundamentals and business viability going forward. Usually Wall Street is not very wrong about things like that. At least for now, you know where the support is, 60. Anything below 64 should have buyers. And if it goes below 56, that's even better. So I encourage you to study the business and not just the chart. Apple, last week, if you were in the live room, it was comical how this headline came out, a nondescript, vague, rehashed headlines of a rumor of a headline it's like 6 times removed from reality. Nevertheless, it helped Apple recover a lot of its problem, but it's still in big problem. If you go look at Apple's lines that I've had for it, and let me see here. You can see these white lines. The first target of mine was met easily. The second was met, and the third is down here. So unless Apple goes to 183, it can still revert lower and even lower still. It will follow the market. It is not worse than the market. The question is now, is Apple right about everything where all the other stocks need to come down to its level versus their all-time high? Or is Apple ready to rally and catch up and save the market to the all-time high? Because if Apple just catches up and gets close to its all-time high, it would lift the whole market. It is a heavyweight still. Think Amazon. Amazon just made its all-time high, and it was lagging, and it ran like heck. So does Apple have that same? We shall see. Technically, when a stock goes back into a prior area that was difficult, 180 give or take, it's not an ideal starting position. So if just now you're feeling good about Apple, you want to go long, I would challenge you to push your boundaries a little bit more. You're doing it wrong. You should be feeling good about Apple down here to get long, not up here, because that's when most people are worried, and then you do homework and you disagree with them and you take a long, you get rewarded. We timed this bounce to the minute almost. And we even said how. We said some headline about AI is going to come out and Apple is going to rally to high heaven. Within hours, that's exactly what happened. So if you chase your feelings, you're going to end up being one step behind always. It's a fact. If this makes you feel bad and you exit here, you're wrong. If this makes you feel good and you enter here, you're wrong, and vice versa. You see how it works? So challenge yourselves. All right. Or ask. ABT. In other words, Apple is not an obvious entry point. If you're investing in Apple, that's something different. And even then, I would not go all in. I would make it a nibble, even though I'm telling you it's the wrong spot. All right. So Abbott Labs needs a bounce, could get a bounce, but if it doesn't get above 111.5, it probably goes to 105. I marked the areas of interest, and they're losing one of them. These two red marks makes it liable to go down to here. So they need a bounce that holds above 111 or 112. Adobe, this is bad scenario. And I did mention the fact that these blue lines, oh, remember these blue lines, I forgot to mention them. Tonight in the video, they will come into play on the S&P. Okay. They're providing support for the S&P, but we'll see how many of them will come into play. But here we have the opposite scenario. These blue lines are moving averages. And the machines look at moving averages, and now they're all above us. So that's overhead resistance. So any rallies will have to punch through these blue lines, and it'll be difficult. Nevertheless, it's following our line, this scribble. So we do have weaknesses. When something rallies fast, see this rally right here? It leaves weak spots. So they need to be above 500. Otherwise, they can drift lower to the mid 400s, and there's not a lot of support there. So you can see here we've marked areas, potential target of 560 loss. So once they lost 560, we had lines up there, important loss. We said this might be the target, and not only that, they got there, and now that is a problem. So they're selling rallies. I will continue to think that they can sell rallies. Everything is going to follow the market. If we have an incredibly bullish week, world peace and all, and we rally and we make a new high, everything will bounce. Until then, every bounce, I think we'll try to make a lower low. ADM, Archer Daniels, let's see. Don't have a lot of marks. All right, so on a shorter time frame, this is falling into an area that could provide some support somewhere around 59. Because of this zone, looks interesting. There isn't real support, so I'm guessing that if I'm long, I want to see if there is a bounce, what happens with this. This is going to be a resistance, I have no doubt. And it could drift down here. And if so, it might repeat that shape quite a few times. There is a vacuum void here. I'll put a V. So if it comes to here, it needs to hold it. Otherwise, 55 is fair game. So I'm not saying it's going straight to 55. I'm saying it could slip down. They will have a few bounces in between. So how can you avoid all of that? Just get back above the high that we recently posted. Otherwise, you're at risk of drifting lower. All right. Everything I'm saying is notwithstanding earnings, and this one has earnings in 9 days. Speaking of earnings, starting next week, this week, Friday, this is an unusual setup. Thursday night, Netflix reports, and then the week following, most of mega caps follow in the next couple of weeks after this one. So we're going to have to start accounting for that wild card on a global scale. Okay, AI. I can't tell you how many times I've said avoid, avoid, avoid. This is a company whose name is AI, which is the theme that's making every company run. Why is the P&L not growing an inch except for its expenses? Yeah, avoid it. AI is avoided. Yeah. You can see how our lines were pretty good on it in the past. The zone that they're trying to hold, if they lose it, they could go to 14, 12. I don't know. They need something. This is probably a buyout. Every rally is on a buyout, not on its own merit. Oh, who's going to buy it? This is Siebel, the guy that had Siebel's system, and he made Siebel so he can sell it to his old employer, and he did, made billions. So let's see if he can repeat it here. I doubt he'll make billions, but the stock is not doing well in the age of AI, which should give you some what? So, first order of business, get above 26. Otherwise, you're going to probably single digits. Technically speaking, this is starting to look like an old EV story. What do I mean? If they don't go above 26, this is the target basically from here, which puts it below zero, right? A whole bunch of stocks did that before they collapsed, like Fisker, Hyliion, all of those. So I'm not saying this is going to zero. I'm saying you should doubt it. Okay. So what do I not do? I don't add to my risk. Let's say I risk some money on AI because of my own thesis, and you're allowed. I would not pour more money into it. You don't average down on a stock like this one. It's unproven. Its viability is in question. I don't double down. I could add to my risk in a stock like Apple or Microsoft. I would not add to my risk here. That's my, and if I'm looking to go long, I could nibble. If I'm looking to buy 100 shares, I would buy half. And if it gets cut in half, I would add the second half. Otherwise, I wouldn't touch it. AMD. AMD has its moment of 1 + 1 = 6 still. What do I mean? So AMD rallied in sympathy to NVIDIA's success last year. NVIDIA actually changed its P&L. This one hasn't yet. So the stock is rallying in sympathy. It's given up a lot, which is good, but it still has a lot of froth. Expectations. It's twice as expensive as before, I think, from the price to sales or close to it, which means the stock price has risen far faster than the actual sales. So it's expectations on future sales, where NVIDIA doesn't have that anymore. They already delivered the sales. So Lisa Su, the CEO of AMD, needs to come out and do or say what her uncle did in NVIDIA. Meaning, where is that headline that, yeah, we're going to grow our sales too with this new thing that's called AI? Otherwise, head and shoulder-ish pattern. In other words, it could drift down to 132, 128. Personally, I wouldn't touch it at these levels. Look at this. This was a party hat we drew, and it came to fruition. And this level, I'm going to move it over to here. It's still the battle zone. If how about we say this? If AMD is not over 184.85, it's probably going to 136. This is also still. That's what I just said. So maybe it repeats these two things the same way, this one. And I will add one letter. You see how we're using the same concepts? It's all resistance up here. You can see how the bulls have a lot of work and how this is head and shoulder-ish, $36. Yep, right in the middle of this circle here, half circle. So AMD is in danger. It needs a headline. Maybe the earnings will save it in 16 days. Asana, it's one of those stocks that I said if you need a long, you can purchase half of a position in shares. If somebody did that, there's nothing to do. It's trying to find footing. Although the stock is good, it's one of those smaller companies, high spend, not enough growth, although on a yearly, but plateau of late. So I would not add to my position if I'm long, and I would, depends on how I'm long. If I sold a put, I don't do anything. If I bought shares, I don't add. If I bought calls, that's my least favorite. I should manage them as if they're any normal risk. In other words, if I'm down X%, I should be out regardless. I would not add in calls, okay? This is not an adding spot for Asana. ASML reports earnings this week, so you should pay attention. It's futile for me to give you chart comments because it's all about the actual reaction to the stock. And maybe it also impacts all of these stocks that look like it. The P&L is fantastic. Look at it. It's almost fake. It's so good. So how it reacts is just purely based on expectations, hope, feelings, sentiment, how people have priced in whatever they've seen or not seen. I ask you, what the heck is this here? What is going on around 800? Okay, so how about we say if we lose 930, we're in deep trouble to 870. And if you lose 860, you're probably going to go below 800 quickly. So let's mark that area. First, you do have support here. Okay. And if you lose it, you're going to come down to the second level of support here. And if you lose that, this should be a target in the next couple of months. If the markets have topped, ASML will be under 800 in the next couple of months. The earnings might come out and they might say, whoa, we doubled our whatever, and it could go to all-time high in a minute. But in the absence of that reaction, like an NVIDIA last May reaction, this one it's a lot easier for it to come back down and fill reality. Look at all this, all these holes here. Like there were no trades around 800, none. This is not typical. They don't leave holes like this in the volume often. Technically speaking, it has a lot of reasons to come back a lot lower. We'll see what the earnings say. I am not very familiar with this company. Technically, I would think down is easier than up. You have resistance at 156 and 152. If you can't hold 144, you're probably going to 136. Study the company. Those are chart comments. Broadcom, good company, excellent P&L. I don't want to short it for no reason. The chart comments, let me see if they're still valid. Oh, I remember these conversations. We were saying, how the heck do you trade the stock like this? I said the stock chart is so active as if the fundamentals are in danger, but the fundamentals are so solid that it makes me think that the only real way of doing this is to sell calls like 1,000,000 miles above and sell puts 1,000,000 miles below, and just basically be short a strangle and create income out of the volatility that doesn't exist. This stock is super solid, and the volatility is probably the best way to make money off of it. I don't recommend anybody sell naked calls and naked puts on a stock that big, but if somebody has the knowledge and the account size it requires, you can do that. Or make it an iron condor, like once a year or twice a year. Meanwhile, it has resistance above 1420, of course, and support at 1300, a little bit more at 1260, a little bit more into 1200. You lose 1200, which I don't foresee, but if you do, you're going to go to 1100 pretty quickly. Those are very broad comments because the stock is very big and we're up in the stratosphere. Folks, I don't care how good the stock is. If the stock market is going to fall, all stocks will fall. Broad comments for me. Boeing, it cannot stop falling, and it started falling when the market was still healthy. Still healthy, the market. We're within 3% of an all-time high. So there's a lot of room to fall for Boeing. I have a short put naked, and it's I rolled it down, and I've already sold some calls against it for myself a couple of times. So yes, the stock trade, the option trade is in trouble, but I wouldn't mind rolling it down and try to get out of trouble just with time passing. If I get put shares at 160 or wherever I end up rolling it down to, it's not the end of the world. I can just immediately sell the shares. Now I can buy protection. If I'm short a put spread, I just roll it out in time and down a little bit if I can. If not, just roll it out in time to buy me more time. And I would close it on any relief pops. Every situation is different. Reach out if you have specific questions about specific trades. Okay, that's Boeing. BABA, I don't trade it. I've been very consistent about not trading it because it's a Chinese stock, and that's an extra variable that I don't know much about. What's going on in the Chinese politics. So I avoid it. If I don't know, I avoid it. So now technically I can tell you that it's very easy for it to lose 70. And if they do, they'll go back down and retest the low. I would avoid the stock at all cost, because if it loses this low, which looks impossible, I don't know how low it goes. I honestly don't. So just be aware that you're in the hands of a lot of black holes as far as information. The business itself may or may not be good. I've lost track. The P&L doesn't have major alarms, but it's no growth, shrinkage in the company that used to have more sales than Apple in one day. So what I'm saying is the resistance still is there. This was a level I was interested in before. So if you lose the recent low, you're going to retest the 67 area. Be careful. If I'm investing in BABA, I wouldn't add BCE. That is a hideous chart. So why is the chart going down to zero when the business is not? Ask yourself that. Go find out, find the question. Okay, so I put 3 lines and they're at the lower line. I said once they lost this, this is a target. Once they lost this, this is a target. All right, so now you're at the mercy of one level from March of the pandemic. What was before that? Oh my goodness, twice. 2015. Wow. Do your homework. 2015, pandemic, now. So this could be a massive win or a hideous collapse. If you cannot hold this level, you're probably going to 23 eventually. This is an incredibly sharp line in past history. We're going almost a decade back. So it could be a violent bounce or a disaster. So be careful. If I'm long, I'm not adding. BIDU, same comments as BABA, and it looks like it's respecting our levels very well. I brought to our attention prior fails, and they continue. So if you lose this guy right there, which is 97, you're probably going to end up at 92. Yeah, all Chinese stocks I avoid because they're all under, like, I don't know who they're going to go after next. So what I'm saying here is rallies are going to be met with resistance inside this zone. And they could curl back down and come back to here. Be careful. For me, the method here would be get out on rallies. Yep, exactly. BITO. So this is crypto, and crypto is losing an edge. I'm watching a few tickers. If we lose the support we're at, and this is a general crypto comment, in BITO, if we lose 28 or 27.5, we can find ourselves at 24.50 fast inside the square. So what am I saying? This line is still here. It is support, but if you lose support, you will come to this box pretty quickly. Resistance now we have above. I'm tracking Ether, and the Ether stock chart is getting pretty ugly. Ether might not make a new high, which means that Bitcoin has made its high for a bit. Eventually, Bitcoin will be over 200,000. I can throw a class on that one. But for now, I would not load up. You know my story with crypto. Rode it all the way from the very bottom, and I helped you ride it too if you were here. And I will wait for a huge drop before I load up again. Trading-wise, you can trade it. If we fall to 26 in BITO, you can buy it to bounce, but I think it makes lower lows. If you lose 28, it's going to be difficult to recover it. Bank of Hawaii. I gave up on betting on small banks. Period. End of story. If I'm betting on banks, it's the big guys, and I'm short. You know my story. I'm finally green, very green, because of what I shared on JP Morgan, for example. But what you don't know is that I'm also short the XLF and Berkshire. All right, Bank of Hawaii, you better get back to 60 and 61. Otherwise, it's going to 54. There is not a lot of support, and there's a must-hold level. So this one here, they're losing, 58.50. So they need to be above 63. Until then, this area is resistance, and they need to be here. If not, they're going to be here in a series of lower lows and lower highs like this. 8 days, they'll report earnings. Maybe the reaction to the earnings will be favorable and they pop above the X. Be careful. Berkshire, I'm short, and the way I decided to go short, I sold calls throughout the year, and they were naked calls for myself. And my concern is that I cannot believe that Warren Buffett let half his assets be one company. This is the guy that tells us how to invest for decades, and he puts half his eggs in one basket. Apple. That's just shocking to me. I have concerns. So from a charts perspective, it's an easy short, and it was an easy win. I will close it this week or next because I'm also short the XLF. I will close the XLF short or it, or JP. I haven't booked that either. So, and here's the deal. Technically, rallies now are going to be met with resistance, and if so, the curl must hold. If it doesn't hold, there's a head and shoulders that will put it in 380, 375. I think you will have an opportunity to go long at 375 if you're interested in investing. This is still an outstanding company. And fundamentally, its individual components are great. I just have an issue with the balance. Oxy, I disagree with him, and the fact that he has all of his eggs in one basket, or half his eggs. Personally, I wouldn't go long above 375. Right. Tom, what do you really feel? Holy moly. And I thought I was opinionated. Citigroup. Yeah. Citigroup, I wouldn't touch it because I feel like it's a black hole of information. I can tell you one thing, that this spike higher here is weird. So I believe there should be a lot of sellers here. And if that's the case, I think it's easier to come down to 56 before we get back to a new high. So if I want to make money off the stock, it's going into earnings. No, they reported earnings. Okay. Oh, that was a reaction for the earnings. So I'm going to say it then. It's easier to come down to 57 or lower than it is to go above 63. Hopefully that helps you trade. Now, before the market opens on Monday, we will have, I believe, Goldman Sachs report, and throughout the week we'll have like Bank of America report. They may affect Citigroup temporarily, but you know, we've already known what they have going. So CEIX, this is a good company if you want to invest in for the long term, and maybe it gets bought out, maybe not. It has really good support and unfortunately a ton of resistance, so there's no need to pile in all in. Let's say the market collapses in the stock market, you will get an entry. So I would put alerts. I have alerts for myself to take a big position at 72 and double it if it goes below 62. Until then, if I'm invested in it, there's nothing to do as an investment. If I'm trading it, there's really no clues. There are no clues. You have a lot of support at 78 and a lot of resistance at 88. And it's not a trading stock, it's an investing stock. So if I'm long already, I wait for a huge dip in order to add. If I want to take longs, I would nibble maybe 30% of my allotment and then double, and then leave room to almost double. Okay, CrowdStrike. Whatever that was, I'm going to move it forward. That's going to be a problem on the way up. So there are resistances at 325, 330, and 337. And you do have one support at 303. You lose 303, you're going to 285, where you have a lot of buyers. So this is another easy come, easy go area. Look at the volume, how choppy it is. I can see it if the stock market crashes, and I mean that. If the stock market crashes, this could be in the 250 or lower area. If the stock market crashes, you heard that part, right? Look at the stock. This is as crazy as it gets. Yeah, there is reason to be excited about the P&L, so I'm not saying it's all hogwash. But look at the areas. I mean, yeah, we knew there was going to be a pop, but my goodness, and this is a stock that I've gone long for us. This is just too high. For me, I wouldn't touch it for myself above 260 or 270. I honestly would not. Don't know if it ever goes back to 210 or 200, but that would be a great place to load up on it. There are not a lot of clues up here. Wait, when does it report? 46 days. Okay. Cisco. A dinosaur. Survivor of the .com. Cisco's story was written back in February. What do I mean? Look at that earnings reaction box. There's no need to expect leaving it. So you go long, you know you have support in the lower third of the box. So anything below 47 is solid support until you lose 47, and then it's 44, which is the low from last November. That's about it. And if you're invested in it, I would stay in it. Anything above 50 would be exciting to get another dollar or $1.50. Boring as heck, right? That's because the P&L is boring as heck. Solid company. It's not a bad thing. There are no action items on it. CTVA. Unlike this one, my goodness, what the heck is this thing? All right, so this is bearish. On a daily basis, it's easier to get to 51 than 60. Earnings in 17 days. Other than that, on the shorter term, you better hold the support from 53. Otherwise, it's probably going to slip to 49-ish. I'm asking what happens in this vacuum point. Anything above 58 launches it with a new leg higher. I think it's easier to go lower. Disney falling into an area of interest and now well below it to a better area of interest. This yellow box was an imbalance from candle here. Sharp resistance but trigger opportunity. Those were comments from before, so I would change that. I would expect support zone. Those are old comments. Same line I'm reusing, and look how it matches up with this square, rectangle, which I just drew this week. So what can I say confidently? Rallies into 116 and 117 will be met with a lot of selling starting at 115.5. Earnings in 23 days. I can also confidently tell you it lost a couple of necklines, the worst of which could launch it down $6 from up there. So we could be targeting 110, could be, but a lot of support just below current price. So the way to go long Disney is on a bad day this week, sell some puts or put spreads and have them expire before the earnings, or commit to it and sell some puts at the end of the year or to September. We're below here. It's on my list to trade. How about that? I would not add to my risk. And if I'm on long calls, I will take them off and change my position to be something different. DXCM. Dexcom. Zoom out. Tom's got opinions today. I'm reading comments from the live room. Thanks for being here, 45 people. All right, so what is this? Dexcom. All right, so we traded this before. It's unlike all the other stocks, it's looking easier to rally. They broke out from 129. They need to hold that. So if they come back down to 120 and 115, that's a setback. If they lose 115, they'll be in the same pot as everybody else on the back foot. For now, the bulls are in charge. They're trying to break out from a huge resistance level from last July. So there's hope for the stock as long as it stays above, say, 128, 129. Okay, so let's see how they behave this week. If they make a higher high above 143, they confirm that breakout, and then the moon. Look at the P&L. I mean, P&L is pretty decent. It just needs a good stock market to do its best. Enphase, I'm told it's heavily shorted. It has a good business, but the chart says nothing right now. It says there's no information. The only information I have is that it's getting tighter and tighter. Something's about to give. So it's either at 90 or at 150. I'm not sure. There's a lot of energy. Higher lows, lower highs, and all these circles, that denotes an area of contention. So if the bulls miraculously are able to take that out, I can't tell you how high it goes, but that's not my scenario. I think it's easier to drift into, one more time, into support zone. I don't have any action items, and the earnings are in 9 days. Pay attention, it reacts negatively or positively. It reacts with a bunch of other things, like any industrial comments will cause it to go up or down. Any solar company reporting will cause it to go up and down, especially SEDG. So you better learn the schedules of those other companies and industries. Etsy, I sold puts and I didn't have the chance to send them out. Maybe I'll have to. I'll have a chance to do it again. 17 days until their earnings. I mean, I like the chart. It has a lot of support here, and it's a wide zone of support, which is why I don't want to buy calls. I would sell a put. But if you twist my arm, I would buy shares or calls as a trade. Now, problems in the stock market in general aside, it's easier to get to 73 and 4 than it is to 60 and 61. So I would be okay holding calls or shares. But I am long via credit put spread. FCX, there's too much love for this type of stock, and technically there is no way on planet Earth would I ever consider going long a stock when it's doing this. This is a huge rally. Let's just consider this rally, not the whole thing. It's 40% into a massive prior fail. So all I have to do is here, for everyone that just bought FCX this past week, just next time look left and ask these people, what happened the last time you bought it at this level? Just ask them. And if they'll say, oh my gosh, I lost my you know what, then you say, oh, I think I'm better and smarter than you. Let me try it. Buy the dip so you can get the opportunity to break out, or let them show you they can break out and then go long. Oh, I miss it, Nick. Well, if it's an investment, you already missed the easy entry. Where's the fire? So for me, it's a buy the dip scenario. I'll give you levels that might come to fruition. 47.5, 45. Those are targets 1 and 2. Target 3 is 41, if not 40. So that's not a forecast. It's areas where I would be interested in buying it to trade the swing back up. That's all there is to it. So this is the way I would say vulnerable. How about that? That's a fair statement, right? Vulnerable, possible, not easy, right? Okay. This is the end of the video, so I will stop recording here and start another one.